Hi, and welcome to the Stock Scores Market Minutes for July 17th, 2017. This week's topic, what really matters. Look at the market analysis that I do each week, and then the trade of the week on Ferrari symbol race. All right, let's get into this week's topic. When predicting where the market will go in the future, I have found that common sense rarely prevails. The number of times that I have heard in the last 10 years that the market is destined to suffer a huge correction are too numerous to mention. To predict the market, you really have to focus on what the market cares about, what really matters to investors. And this week's market action confirmed yet again that the market's primary focus is monetary policy. When the Fed suggested that there wouldn't be a number of interest rate raises, that the market would not go towards higher rates longer term, well, that gave the market the boost and perpetuated the upward trend. So many people argue that valuations are too high and that there's so many other reasons why the market should correct. And yet all that has really mattered since the financial crisis is what the Fed does. Now, that doesn't mean it will continue to be that way forever, but for now, that is what really matters. Valid arguments may only be realized if the market cares about them in the future. All right, let's get into this week's analysis. And here you can see the break caused by Janet Yellen when she made some comments about where interest rates were likely to go. Yeah, we'll maybe still get a few more rate increases, but long-term rates are not expected to be high. That's good for stocks, and up the market went through the latter part of the week. In the longer-term trend, we can see that the longer-term trend is up, and that medium-term trend that I've highlighted a few times has held. We bounced off of it this week with the break from the flag pattern, and so my expectation is that we continue to move higher in that upward sloping channel. The small caps have failed to keep up, and it's largely because the small cap stocks don't have the heavy weighting in the ETFs. They don't attract the attention of the institutional investors who are buying the market because interest rates are low, because of monetary policy, because of demographics wanting to simply conserve capital. And so you can see that while the S&P has been moving higher in the past 8 months, the Russell 2000 has pretty much just been going sideways. Now it is building optimism, and we are nearing a point of breakout from that ascending triangle pattern, but I need to see this breakout happen with some volume support before I'm going to get too excited about the small cap stocks. I like the optimism that's building, but it's not quite there yet. Now, the Toronto stock market has really underperformed the US market, largely because of weak commodity prices. The trend, you could say, is still down, but when you look at what's happened over the last, say, 3 weeks, we're more or less sideways. So it does seem like the downward momentum in this little bit of a pullback for Canadian stocks has slowed somewhat, but we still haven't got anything exciting. So I would call this neutral in the short term. Now, the long-term chart has broken that upward trend. We've talked about that a number of times. We are drifting lower. I wouldn't say this is particularly worrisome, but it is still a bear market trend because we are moving lower after breaking the upward trend line. So it's a somewhat bearish chart on the longer term. Moving over to the TSX Venture, which is, of course, the junior stocks in Canada, and we have a bearish chart here. We are in a downward sloping channel, and there's no sign of optimism building yet because we are not making rising bottoms, but rather moving to new lows. So until we can build a rising bottom and then break up from it, I wouldn't get too optimistic about the TSX Venture market. The U.S. Treasury bond market has been drifting a little lower here over the past few weeks, but generally moving higher over the last few months. Higher meaning interest rates lower. We're now pulled back to the upward trend line where it should hold, and you can see it's been trying to hold, but we've got to watch this closely. If we see this break down in the next little while, then that should lead to lower bond prices, which are higher interest rates. So we're at a pretty critical point in the, call it the medium-term chart here, if we get a break of that trend line. US dollar continues to grind lower. You can see just consistently falling tops and moving to new lows. In the big picture, usually I show the weekly chart of the US dollar. It's not that bad. It's not as bad as it looks here, but still the US dollar is weak, mostly because the rest of the world is getting better and their currencies are attracting more capital. Less of a safe haven move into the US dollar. Despite the weakness in the US dollar, gold has had a hard time finding a footing. It is really building this pennant pattern long term. You can see we're gyrating around in here. I expect it will continue to do that. We're basically consolidating, compressing volatility. That means investors getting more confident in what gold is worth, but at the same time getting less excited or emotional about buying it or selling it. And so it's becoming more and more of a dead market with less volatility to trade. The oil chart has built a very short-term rising bottom there. It still has some work to do to break the downward trend line, but it's trying. And of course, it's been weak for a number of months, so this is encouraging, but by no means would I give cause to become a bull on oil or oil stocks just yet. It's just a little light at the end of the tunnel for the oil market. And of course, fear continues to be at an all-time low. Call it complacency. Yes, we're going to get spikes up again in fear like we have a number of times, but they tend to be very short-term in nature, and so you don't want to get too worried about a major correction yet. I don't see one happening next week, but let's always keep an eye on this chart because it's important to be defensive. So long-term then, I've upped my ratings on US stocks back to bullish on both time frames. Canadian, bearish long-term, not that bearish, but somewhat neutral upgrade on the short-term chart because we are starting to build a little bit of a rising bottom in the very short-term chart for the Canadian market. Bearish in both time frames on gold, but you could almost argue that we're moving towards neutral there. Oil bearish, long-term, neutral, short-term. Once again, the US Fed gave stocks a boost, putting the US market back into the upward trend simply with their comments this week. Canadian markets continue to lag because of weak commodity prices, but as those commodity prices perhaps stabilize, particularly oil, we could see the Canadian market stabilize as well. Gold is consolidating and will likely to continue to see lowered volatility. That makes it a little less desirable to trade gold and gold stocks. Oil is in that downward trend, but it does look like it's trying to bottom. And as I said, fear is low. All right, trade of the week. This was a day trade on Ferrari. Symbol is race. And what I always look for is life in the stock in the early part of the day, which is what we had here. This is a simple one-day chart for July the 12th. And then when they consolidate like this, that's great. I have an indicator called a message candle indicator, which highlights when they can break out of those periods of quiet trading. And in this case, it went racing higher, pardon the pun. And when they go up this much, this one actually went up as much as 11 to 1 RR. When they do that, I tend to switch, and it just barely hit 11, by the way. Mostly, for the most part, it was 10. When they get up over 6, 7 RR, I usually trail my stop by -1 RR, and that's why my exit was right here, as opposed to waiting until the end of the day. Sometimes when things kind of go parabolic and move quick to the upside, I want to protect those profits. So that's what I did, and you can see that here in the strategy application that I have for my day trading strategy. It exited me out at a 9 to 1 RR, as opposed to waiting until the close where maybe you got a 7 at the close. And that's, like I said, when things give you a real good, fast profit, I get a little protective of that profit. All right, that has been the trade of the week. That has been the Market Minutes. Subscribe to the channel. Like it if you like it. If you have comments, please leave them. I always try to answer them. Have a great week in the market and trade well.